everybody. Just giving people a few minutes to get in before I get started. I'll actually officially start in 3 minutes. Alright, just going to give it another minute here and we'll get started, everybody. Alright, I see people hopping on YouTube. I'm going to be starting in just, a second here. I'm going to start right now. So, give me just a second here. Alright, everybody. So, start out. My name's Drew, aka Catching Rockets. I'm just going to be doing a really, simple video on my ToS setup, specifically active trader. And how I scalp trades quickly, get in and out fast. Also, I'd like to say, I'm not a YouTuber by any means, so this is not going to be some high-quality production. You'll probably hear background noise. I'm sorry. It is what it is. I'm not aspiring to be a YouTuber either. Just trying to help people out. So, yeah, let's just go ahead and hop into everything. How you have your main screen set on ThinkOrSwim is completely up to you. I switch between the flexible grid and the charts. And on my flexible grid, I'll generally have 5 tickers I'm watching here. And then I also will have detached, more ticker symbols that I watch on other screens. And then the key for me is active trader. And so to set this up the way I have this set up, you would click on this little grid icon here, customize grid. You're going to turn on the sidebar. And yours will probably default to C for charts. So I click on active trader and I uncheck the charts. And then I turn the sidebar back off and turn off customize grid. So all of this will be recorded and posted on YouTube. So you guys don't have to like try to keep up with me as I'm moving around the screen. You can go back and rewatch it if you want to. And then in ThinkOrSwim, you have this little link icon. Hopefully you guys can see that okay. So you can link it to colors. And then here on your watch list, you also have that link icon where you can link it to colors. And so with that, you can literally just click on a contract and it'll pop up down here. So you can see this is SPY for January, sorry, 22/01/05. So January 5th of 2022. And then it's a 473 put. Once you do this, and then I'll show you this as well, on the gear icon here, you'll want to click this and move auto send on and off up to the first line, and quantity with buttons to the first line as well. And again, you can go back and pause this later and copy mine if you want to. So that way here, I can adjust the number of contracts really easily that I'm buying or selling. Or there's buttons right here where I can click on. I can buy market, I can sell market. But so if I wanted to buy, you know, 5 contracts of SPY, if we look up here, the ask is currently 40, the bid is 39. I can probably try to scalp them down here for 39. Yeah, I just I used up all my buying power for the day today trading, but that's unfortunate because that's going to make it hard for me to show you this. But basically, this little green bar that pops up over here when you click, where it says buy +5 limit. When I click on 39, if the order was submitted, this little buy icon would stay there until the order gets filled. And I could literally click here and I can move it up. You know, like if the price is moving without me and I want to make sure I get a fill, I can move my order up higher just by clicking and dragging to the specific strike price. And then once I'm filled, I can right away go in and put in a sell limit order at whatever strike price I'm trying to get out at. I wouldn't recommend putting in stops, at least not hard stops. But if the stock starts going in the opposite direction, you can easily just click and get out of the trade over here. And then another thing I like is, you know, like if I buy 5 contracts or 10 contracts, I can easily click down to 9, put in my limit order to sell 9, and leave 1 runner and move that up higher if I want to or whatever. So that's really how I use Active Trader. If you go over to the Trade tab, like if I'm looking at SPY, just in case you don't know how to get the strike prices on your watch list, there's a couple of ways you can do it. So like if I wanted to buy 478 calls, I can right click, go down to add SPY to watch list, and then I can select my specific watch list and you see it pops up there. And another way to do that is right click, copy, and then I can click up here. And on Windows, you would press Control V. If you're on Mac, you push the Mac key and V, and it'll paste it in here for you. And then you just push Enter, and as you can see, it's in there. Oh, and I should also add, if anybody has any questions, please at me, because I have this linked in like 3 different Discords, so I can't watch all of the chat rooms. I am watching the YouTube chat room if anybody wants to talk to me there. So that's really it for my setup, I mean, I'm assuming everybody should know how to, get these cells, and the key thing is going to be active trader. If you are using ThinkOrSwim, make sure you have your memory settings appropriate for your computer. And I can probably just show you guys that really quick. Let me see. Oh, so when you launch ThinkOrSwim, you just click on this gear icon, and down here you'll see memory usage, minimum, maximum. You can Google the specifics for the amount of memory you have on your computer. I have 64 gigs, so I'm using 496 and 1228. But you can Google the specific memory settings that you should have based on how much memory you have for your computer. And that's pretty important as far as making ThinkOrSwim run smoothly. Give me a second here. I'm just launching ThinkOrSwim again. Okay. And then we have some new people I know that just joined the Discord. If anybody happens to be watching on YouTube and you want a link to the Discord or whatever, just message me somewhere. But so yeah, that's it as far as my setup. If anybody has questions as far as the setup, like I'm always watching SPY in the Qs and VIX, UVXY, NQES. I also have a pop out like 6 grid chart with all of those. Oh, and this should be ads. I don't know what that's. So these are the ones I watch on another monitor. I've got a lot of stuff going on different monitors. But so since we have new people, I know Shorty did a video Sunday, but we'll just do like a refresher and go over VPOCs, POCs. Sorry, bear with me for a second. I'm getting hot. I'm taking off my robe here. VPOCs, POCs, and things like that for scalping. They're really super accurate. What was I looking at earlier? I'm going to show you guys. My charts aren't really up to date today because I was working last night. I didn't look at charts over the weekend. I worked all weekend. Yeah, like on SPY here. We'll go over this in a second, but you can see this this VPOC was really respected as far as rejection. I'm wondering what this weird level is here on my chart. Anyway, let's go to a chart I haven't looked at yet today. So we had a bear flag at one point in time. So if you don't understand POCs and VPOCs, this is now a POC. I'll go over that really quick. Let's see. So the best way to think of, God, why are my levels like so weird? Sorry, I don't know what's going on with my charts. It's weird. So for people that are just learning about VPOCs or POCs or don't know them at all, they're really important. They act as magnets for the stocks, but they also act as support and resistance levels. And they're good for about 30 days. At least a virgin POC is good for about 30 days. POCs, after they've been touched a few times, they kind of lose their relevance. But so the way I like to explain POCs and virgin POCs is you have to think about the psychology of people when they're entering trades. So actually, I want to find a chart where I can show you like good examples. Whoa. Yeah, this is good here. So, I draw my POCs and VPOCs on the 30-day, 30-minute chart. And if you think about the psychology of what's happening here as a retail investor, if you were to buy Tesla here at this level, 1083-ish, and the next day it dumps, and now you're red on the trade, most people, if they're not selling, red, as soon as we come back up to green or to break even, they're going to hop out of that trade. And you can see it gets respected right here. So if you bought stocks here, next day it dumps, we don't quite get back here. But then when we finally do come back and touch it, you can see rejection, rejection. And we'll zoom in on this level, but you can see like almost to a penny, rejection, 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 finally break through it, basically retest it here, retest, 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 retest. And so you can see over and over, this level keeps getting retested to the point that a POC forms at almost exactly the same level. What day is this? December 29th. And this one back here is December 2nd. So, almost a month later, a POC forms at almost exactly the same price level. So a bunch of people that bought in here are selling here and getting out of the trade break even, which is causing these rejections. We also have buyers here, of course, because we spiked up. But then sellers again back down to this level, selling it again, So this level just keeps getting respected. This was a very powerful VPOC and POC at one point in time. So that's the psychology of it. When you're looking at POCs, just think of yourself. Like if you bought in at this level and it went red, I think most of us here that are, in this video are going to be trying to get out as soon as we get to break even. If you're a more solid investor, you're going to be looking to get out with some gains. But most people are just happy to get out break even. And then you can see on my chart, like I have a gap here. Let's see. So here we're gapping from here to here. Hey, what's up? Eventually, this gap will get filled again, most likely. We also have a gap down here, and eventually this gap will get filled. Um, but so you really want to have these VPOCs and POCs on your charts. Like I said, they will act as magnets. You can see here, Tesla, we have bull flag. Um, and you always want to be looking for these things. This bull flag resulted in a big gap up. And this is a pretty significant bull flag as well. It's pretty big. Um, and so then the inverse, sorry, I know I'm jumping around a little bit. I'm kind of tired. I worked last night. But the inverse with VPOCs and POCs is going to be like our market makers, hedge funds, things like that, where they buy dips. So if if somebody wants to buy like millions of dollars worth of Tesla, they're going to buy a dip, like possibly at this level here, possibly here. You can see there's a lot of buying happening here where it just keeps bouncing really closely off of this level here. So it's safe to assume, we have retail investors, and I'm not trying to draw like a perfect box here, but we have retail investors and hedge funds stepping in here and buying, which is causing these bounces. And with hedge funds, they don't chase price. So they'll place an order, for whatever, $500 million of Tesla here, and they'll get a partial fill and it bounces up. And when it comes back down, more will get filled and it'll bounce again. Or they place an order down here, they get filled, it bounces up. The next time Tesla comes to this level, you should expect to see a bounce because they're still going to have that limit order in place where they only got a partial fill. So that's why the VPOCs are super important. And then the difference between a VPOC and a POC is just the whether it's been touched or not. So once the price leaves the POC, if it doesn't come back down and touch it, it's still a virgin POC. And those are going to be much more powerful than regular points of control. Regular points of control, like I was saying, the more times they get touched, the less they're going to have, the less validity they're going to have on your charts. Again, this one here, it seems to be a very powerful level. If I go back again, we have the POC back here, and we have so many touches on it, and it's still showing some form of respect. Like this gap up literally gapped up right to the POC, which is interesting. Let's see. So for me as a trader, I really just look at the virgin points of control, and I look at the POCs, and and then I'll look for my technical analysis, and with those things, you can really gauge where the stock price is going to go. Like I would expect Tesla, we're in an uptrend right now. I would expect Tesla to hit this virgin point of control tomorrow at 1228. And we'll probably see a rejection there. Let me see if I go further back. Yeah, I mean, it's pretty old, from November 5th. But it hasn't touched that price for a long time, and when we do touch it, it'll probably reject. But we'll have to see what happens tomorrow. But really, you can really just gauge where the price is going to go. Barring like some significant news. Significant news, will completely change everything as far as what a stock's going to do. But so my main focus when I'm trading is going to be my virgin points of control and my POCs. And then I'll look at technical analysis, like on the 3-minute chart. I'll start looking for bull flags, bear flags, pennants, triangles. Yeah, so here on Tesla, well, and again, I'm not going for like accuracy here, but you could have absolutely played this to upside or downside, and that's what I'll do all day long. I just sit there patiently, waiting and watching, looking for good setups, and then like on this, your safe entry is going to be this last touch here. And I'll just keep looking for good setups all day long on different stocks. Don't force trades. Also, we'll quickly jump into like volume profile here. If you're not familiar, volume profile, it's here on the left of my screen, this gray shaded area. And this blue shaded area is going to be the value area. So the value area is going to be where 68% of the trading volume took place on any given day. And then your POC, or virgin point of control, is going to be the area on your chart where the most trading took place on any given day. And that's buying and selling. And if you look closely at these, at the volume profile, if you think of these, well, they're called volume shelves, but I like to think of them as stairs. And if you watch these, like while you have an area like this here, where we have this volume shelf, you're just going to end up having consolidation, because this volume shelf is going to be buying and selling. So we consolidate in here. And now if we line this up, I don't actually really want to include the high of that wick, but if we were to look at this triangle here, our safe entry is this touch here. And it lines up pretty well with the break of our volume shelf. I can actually take this a tiny bit higher. And so how this works, where you have a volume shelf, you're going to trade sideways. I already mentioned that. Consolidation sideways. Where you have gaps in the volume shelf is where the stock is able to make big movements. So basically from one step to the next, or one shelf to the next. And then when we get to this value, or to this volume shelf up here, again, we start consolidating sideways, and not until we break out of that do we finally get some more upside. We have a little bit of consolidation here. And so, as a trader, that's what I'm looking for. I'm looking for my POCs. So if I'm looking to take this trade here, I'm looking for a break to the upside or the downside. My safe entry is going to be like the last touch of the triangle here. And your riskier entries are going to be when you break out of the pattern, or when you touch the bottom of the pattern, you could play to the upside. But again, that's going to be very risky, a little bit less risky, and this is going to be your safest entry up here. I don't like to take trades while we're still in volume shelves. I like to wait until we're starting to break out above or below, because that's where, again, where you start to see movements. And if you were taking this trade here, your first trim is going to be at this VPOC here, which is why it's important to have these on your chart. If you're using orbs, you can use orb levels for your trims. You can also use fibs or whatever you like. I really just stick with the VPOCs because it's pretty safe to say that the stock will get pulled, especially such a short distance here on Tesla, 1157 to 1165. It's almost, an $8 move. You're going to make good money. And once you reach this VPOC here, you take a trim. And then when you trim here, this is also going to become like your stop loss. So I think for most people on Tesla, if you were to take multiple contracts and you took a trim here, this candle you're going to get out. This candle you're out. I guess if you're super solid and you stayed in for all of this, you hopefully would get out on this red candle here. Worst case, you want to get out when you get back down to your VPOC here. Sorry, let me just remove some of these drawings so I don't forget. If I don't do this now, later I'm going to be like, what was I trying to tell myself here? And then also, another very important thing with taking trades is you need enough volume. And if we zoom in on this area here, where we started breaking out of this volume shelf, where we started getting to our close entry, is where we started to finally get like volume spikes. And something important to notice is here we have a little bit of a volume anomaly. So price is going up, volume's going down. Here we get another volume spike, but this is really like, in most cases, a volume anomaly like this is telling you to get out of the trade. If you're playing to the upside, you're going to want to get out of the trade. Volume's dying down, price is going to start dying down as well. I want to go over a little bit more on volume profile. So you can see here this is shaped like a P-ish. Where you have P's, they're generally bullish. You're going to be seeing upside. And on the inverse, where you see lowercase b's, those are going to be bearish, and you're going to see downside. I think for now I don't really have too much else. Make sure you draw in your POCs and your VPOCs on your charts. I like to label mine so I know, at a glance, like, oh, this is over a month old. It's not going to be, it's not going to hold too much validity. Or it's just a few days old, so it's going to be super strong. I also do my low of day and high of day for each day. I And then, like I said, during the trading day, I'll just look for whatever bull flags, bear flags, technical analysis. Shorty really highly recommends people read volume price analysis by Ann Cooling or Anna Cooling. I highly recommend that book as well. If you're having problems executing trades, I would highly recommend reading Trading in the Zone. And if you guys are interested in any of those books, you can message me, and I can give you. Whoa, what happened? Did I turn off my mic? Has my mic been off this whole time?
Yeah, I was watching you circle and circle and circle that VPOC.
Are
And I
you
was like, "Whose mic's muted? What
kidding
else
me?
is new?"
Well, I guess everybody switched over to YouTube. They're smarter than me. How did I mute myself? Wow. Okay, I'm dumb. How do I display the line that goes through the volume? Okay, Leo. So, I'm probably gonna have to do a recap on. Hopefully, you guys didn't miss too much, and you're catching it on YouTube. Wow, that's embarrassing. I had my mic muted. Yeah. No, my mic's good on YouTube, but my mic is muted in Discord. So, the line going through the volume. So if you go to studies, it's going to be the volume average 50. So this is like a 50-day moving average of volume. And so you're just going to type in volume average, and it's right here. So that's the volume average indicator for ThinkOrSwim. Okay, I'm sorry, guys. Wow, I'm stupid. How to draw VPOCs and POCs. Sorry, I'm getting like DMs. So yeah, I'll go over that, Lebowski. Did you switch over to YouTube by any chance, Lebowski? I'm just asking if I need to go back over stuff. Or actually, to anybody in the Discord, did you guys go over? Did you guys switch over to YouTube to listen to me? Hopefully. If not, I can go over everything again. But so, as far as drawing in, let me just go to a chart here. I know I haven't charted on Disney in a while, so for VPOCs and POCs, yeah. All right, cool. I'll go over them really quick. So, like I was saying earlier, I chart my VPOCs and POCs 30-day, 30-minute. Shorty does the same as well. Most traders are going to be using 30-day, 30-minute. And then I look for the significant ones. So I use the price level. And price levels is a double click. And then this might look like it's not virgin anymore because it left and touched, but we're not worrying about touches until the next day. So pre-market and after-market doesn't matter. It's going to be the next trading day. A new VPOC on any given day. So the newest one here is going to be virgin until it gets touched the next day. So right now this is still virgin. What I do once I draw it, I'll change it. So this is December 20th. I set the color to yellow, but that's my preference. You don't have to copy me. I do a dashed line, and I click save as default so that every time I draw this price level, it's going to come up yellow, dashed. And then all I have to do is just change the date. And I have show name on the right, and right extension is turned on, and show price on the right as well. And then you just click OK, and there's your VPOC. And then I just go through my charts, and I look for ones that are significant. So I would grab this one here. Even though it wasn't really respected on this day, this is a huge, basically a gap up. Right at open, we just rocketed. I would grab this one here as well. So this one here, good example. This is a virgin POC. Never gets retouched here. It's still a virgin POC. Comes down, touches here. Now it's just a VPOC. This one here is still a virgin POC. This one here, virgin POC. Virgin POC here. For a second, I thought we had a gap here, but this is during trading hours, so no gap. But so yeah, then I like to go through and draw gaps on my charts, because more likely than not, they will get filled. We have a gap here. Gaps are easier to draw in on like the 1 year, 1 day. You can see I have this gap marked here. There's that gap. So yeah, that should about cover it. Unless anybody has any questions. Hopefully nobody said anything about whether or not they didn't hear me, but gosh, that was really stupid. I did record it, and then it's also going to be posted on YouTube, so if you do need to go back and watch it, it'll be on YouTube where you'll hear everything. Sorry about that. I don't know how my mic was muted in Discord. But Maticus, I'm glad you had fun watching me circle VPOCs with my mouse and POCs with my mouse.
It's always fun.
So I'm just giving it a second to see if anybody has any questions. YouTube lags a little bit behind on the comments, so. Oh, no problem, Lebowski. Hopefully this helps you guys out, at least a little bit. But definitely get those VPOCs and POCs on your charts. Get the high of the day and the low of the day on your charts. I know Shorty does not like to trade. Sorry, let me go to a lower time frame here. Shorty doesn't like to trade between the high and the low of the previous day. But so they're good levels to have on your charts. Yeah, so I'm super embarrassed with my mic muted. But so like I said, I'm not a YouTuber by any means, and I'm not aspiring to be a YouTuber. And that's probably one of the reasons why I'm not even smart enough to unmute my mic. Anyway, I hope this helped people out. If you have questions, feel free to hit me up. Get those VPOCs and POCs drawn on your charts. And like I said, during the actual trading day, I'll drill down to a 3-minute time frame, and I'll just start looking for setups here. Like right off the bat, I can see there's a bear flag here, and I'm not being accurate with my drawings, but excuse me, sorry. That came so fast I didn't have time to mute my mic. But so big bear flag here on the 3-minute on Disney. And of course, we see more downside. This would be a great trade to take here. And also, like I was talking about, if you were lucky enough to hear me, we're also leaving this volume shelf that's formed here, right about where you would want to take the trade to the downside. So just start drawing these things on your chart. When you see a bear flag or bull flag or pennant, triangle, whatever, draw it on your chart. Even go as far as, it doesn't matter how you draw it, but draw in your volume shelf so that you can figure out where when it breaks that bear flag or bull flag or triangle, whatever else, are you also leaving this volume shelf area where you're going to have a big move? And that's how I trade. So just take your time. That's probably the most important thing. A lot of people, they'll be like, from here to here, of course, this is an amazing trade. If you catch this move from up here at the top all the way down here to where this bear flag formed, like, this is a great trade. You have what, like, I don't know, double top here, triple top. Like, if you recognize that there's a double top here, this is an awesome trade to take. But if you're forcing things and you see, oh, Disney's tanking here, let me hop in the trade because we have to see more downside. Look, it's going down so much. And you hop in on this candle and then you start to see upside, there's a good chance you get faked out here. But if you wait and you're patient, that's really, really important. Wait and be patient. You can always find another trade. You can always trade another day. Sorry, Ajuni, give me a second. I'll answer your question, okay? You can always find another day to trade. You can always find another trade. But what you won't find is the money that you threw into a trade. So if you're forcing trades and you're like, oh, we're ripping down here, let me hop in, and then you get shaked out on this green candle, that sucks. But if you do your technical analysis and you look at the volume, you look at the volume shelf, and you figure out, hey, when we break this bear flag, we're also going to be breaking out of this little volume shelf that's here. We're probably going to see more downside. This is probably a really good trade as long as I have the volume to back up that trade. If I take this, it's probably going to look great. And I mean, like, you can't make this up. Like, what is this price level? Oh, I think this is just the low of the day I drew in here. It's not a POC or VPOC, but yeah, I mean, this move from here to here, like, you're golden. You're making plenty of money. So for me, that's really the big thing. Take your time. Don't force trades. Don't rush into trades. Don't FOMO into trades. Don't chase trades. Take your time. You don't have to be trading in the first 30 minutes. You don't have to be trading in the first hour. I don't like to wait too long into the day to trade because things tend to start chopping sideways. I like to trade in the morning and then power hour at the end of the day. But really, just take your time, look for good setups, and you'll do well. You know, don't try to force things. Don't try to rush. And you can look for little bull flags and bear flags all day long. And that's really just what I do. And it works. Is the P-shape volume shelf? Is this a P-shape volume shelf? Oh, here on Disney right now, the one that I'm looking at? Yeah, it's a P-shape. Can I show the volume shelf better how to recognize it? Let's see if we can find... I mean, I think this is pretty perfect here. So you can see where you have gaps in the volume shelf is where the stock will move, right? So like I was saying, from one shelf, or the way I think about it, from one step to another. Because whatever, it doesn't matter how you think about it, but with a shelf or a step, if you jump, you can jump from one shelf to the next. But if there's no shelf or there's no stair to land on, if you jump, you're just going to fall back down. So you need something to support you. And so, you know, if we look at the volume profile here, we have, I'm just going to draw squares instead of lines, but we have a shelf here, right? We have one here. We have a little bit of one here. And then we have one up here. And you can see what happens. So where we have these volume shelves, you consolidate, chop sideways. When you break above or below, you're able to have a movement to that next shelf. And then this one just broke back down. This was, you know, very quick trade, like 6 minutes, either direction. Chop sideways again in the shelf. Go up to the next shelf, chop sideways again. Upside when we pass through this shelf, chop sideways again. And then up to the next shelf, and then we're going to chop sideways. I don't really know how to show the volume shelf better than that. But also these volume shelves form as the trading goes on during the day. So these volume areas are going to be they're going to be areas of buying and selling. And so when the trading day first starts, you'll see, you know, like little volume shelves that start forming based on what's happening during the day. But within, you know, not too long in the morning, you're going to see a volume shelf here in this area. You won't be able to see one up here because this hasn't happened yet. But that's okay because we have our January 3rd. Oh, no, that's today's VPOC. So, yeah, this wouldn't even matter. But again, on Tesla, you have like a $8 move. You're going to be good to get out of that trade. So. Again, I'm just going to reemphasize, just be patient. Take your time. Look for setups. It doesn't matter what the time frame is that you're looking for a setup, but just take your time. If you look at charts the night before and you recognize patterns, of course, if you find a bull flag or a bear flag on the 30-minute chart or on the 1 hour, 2 hour, 4 hour, day, whatever, the night before, when the market opens, if it crosses, out of whatever you plotted on your chart, feel confident taking that trade. You took the time, you found the setup, and go for it. But intraday, don't just YOLO into trades because you're like, oh, Tesla's green here, let me just hop in. It's got to go green more. That's never necessarily the case. You want to look for, your technical analysis. Hang on one second, I have to cough, sorry. And look for those good setups. And again, here on Tesla, this is a good little trade. And this is how you stay consistently profitable. Take your time, draw in your technical analysis, draw in your entry point, recognize that your entry point also coincides with leaving this volume shelf. But also, a big thing is when you're getting ready to take that trade, make sure you have the volume as well to support taking that trade. Because without volume, you don't have anything. So again, really, during the trading day, slow down, start drawing things in. If you're newer to trading, start just looking at a couple of charts. You don't need to look at 16 charts. Look at 2 or 3 charts and just all day long look for setups, look for bull flags, look for bear flags. If you're new to technical analysis, make it a goal to try to spot one type of technical analysis all day long. So again, if you're new to technical analysis, just be like, okay, today I'm just going to focus on finding bull flags and bear flags. And, they're pretty easy to spot. And then the next day, you can focus on looking for bull flags and bear flags, and also focus on looking for triangles, or ascending pendants and descending pendants. And if you're not familiar with all of these things, like I said, I have an 8-hour course on technical analysis I can give you guys. There's also a guy on YouTube. He says the only technical analysis video you will need. I wouldn't take it that far, but it is a good video. It's a good introduction to technical analysis, and I'll just post it in our Discord here. Anybody that's not in our Discord orbit that might be watching on YouTube, you can just message me, or you can look the guy up. It's the trading channel, and the video is called The Only Technical Analysis Video You Will Ever Need. Sorry, one second. So, yeah, the trading channel. Let me calm my dogs down. I'm sorry. Bear, that's enough. That's enough.